discover how to create a 9-figure property business in today's episode with John Makarewicz. And John Makarewicz is a seasoned president and head of operations at Ferris Capital Partners, a leading real estate investment firm. With over 15 years of experience in the industry, he has a wealth of knowledge and skills in operations, management, growth, and sales. So, John, please tell us, how can entrepreneurs create a 9-figure property business, and what vehicle would they use for that?
Welcome to Awakened Titans podcast with Lily Patrascu. Mind-blowing conversations with influential business titans sharing how you can manifest abundance, love, joy, success through quantum awakening, quantum manifestation, quantum healing, quantum miracles, exponential business growth, and innovative products and services.
Yeah. So, for me, it really is all about starting small. So, for me, I always like to have a clear vision on where I'm headed, but I try not to get too married to the overall journey until I'm in the actual process of moving forward. So, as I've gotten into my career, I'm 44 today. So I've navigated, the 2000, stock market bubble, the 2008 Great Recession, the pandemic. And so I guess I've learned that you can never really anticipate exactly what's going to happen in the future. So when you have a clear vision for what you want, say in 10 years, in fact, that's an exercise I tell all entrepreneurs as they're starting their business, is be very clear about what success looks like and what those metrics for that success look like. But once again, don't get too married to the plan. You have to be able to react as new information comes, whether that's a change in the economics of the business you're in, or a global, economic challenge, or something like the pandemic, which you can never expect, right? Those black swan events, if you will. So I always tell anybody who asks to start really small, but have that clear vision, but take incremental steps every day that will help you reach that goal. So once again, being very clear what the end looks like, but just taking small steps on a daily basis to reach there. I think a lot about what Bill Gates said, that you sort of overestimate what you can do in 1 year, but underestimate what you can do in 3. And I think that's really powerful if you slow down to think about it. So it allows yourself a little bit of grace if you fall a little bit behind on your big goals, maybe in year 1. But once again, over a 3-year time horizon, you can accomplish so much more than you really think. So it's about just, once again, small incremental steps on a daily basis with passion and intention that'll help you reach those goals.
Thank you. Tell us, what vehicle can entrepreneurs use in order to create a 9-figure property business that you have found most effective?
Yeah. So for us, and for my journey, it actually was a residential real estate business that we scaled up and had that 9-figure exit. So, it goes back to, really getting the fundamentals of whatever you're doing right from the start. And so for me, what I've learned is that you've got to get the team right first. So nobody does it alone. And I'm a firm believer that, no matter who you are, luck does have a major impact on your success, right? So I always say I'm very fortunate and lucky to have been born in America, and it may sound a little controversial, but I also have privilege as a white man, right? And so I have to acknowledge that and understand that did give me a bit of a leg up. And so, candidly, Lily, I really get frustrated when entrepreneurs, right, to try to create this story that they're completely self-made, as if they didn't have help along the way from whether family, friends, or obviously employees that they may have brought into the team. And so I know very comfortably that I would not achieve the success I've achieved in life without a lot of help and support from those around me. My wife, my mother, my family. I have 3 great kids. They support me. But really, if I look at the companies that I've worked with, we were very intentional about getting the right people on board. And, I don't know how much you know about the founder of Costco, but he was somewhat controversial in the sense that he said, look, I don't really care about the shareholders, at the end of the day. What I care about is hiring really great people and taking really great care of them. And I know if I do that, they'll take great care of the customer. The customers will keep coming back, and the customer will look after the shareholders. Which, if you look at like Milton Friedman and some of these economists, in the 70s, that was all about shareholder value. So him saying that in the 80s was somewhat radical. But if you look on a long enough timeline, Costco is definitely where you should have invested your money, versus maybe some of these companies that are more willing to come in and slash a quarter of the workforce just to meet a quarterly metric, right? And so taking really great care of your people. And to me, to build that 9-figure exit, it really started with a lot of intention and focus around the hiring process and making sure we're bringing the right people into the team such that we multiply our results versus simply add to those results. And by that, Lily, I mean, if you find the right talent, not everybody's created equal, and some people can do the work of 3 to 4 individuals, right? And so that's what I mean by multiplier. You find that one person that just really knows their craft, really understands whether it's marketing, finance, whatever, and bring somebody onto the team that's better at the things than you are, right? So it's like, I know I'm really good at problem solving and system creation, but I'm not an expert in marketing. I'm not an expert in finance. So I need to go find the best marketing and finance person in the world that I can, attract to me and our business to find those results. So it really always starts with the right people around you. And that starts whether in your personal life or in your professional life. People are critical to your success.
Thank you. What's been the best vehicle in the property business that has led to your big success? Is it multifamily investments, or is it something else?
So so the multifamily investment is somewhat newer. I've spent my whole career in real estate. I've been an investor my whole career. But the business we scaled, Mark Spain Real Estate, was a residential real estate company. In terms of investing today, I would say that for me, when I look at what's happening in the world right now, it's pretty clear that we're seeing some major change. Countries are voting in, different kinds of parties than they historically have. But the bottom line, Lily, is that if you look at the demographics of the world, we have fewer people in this generation than we did the last, and there's fewer people in the subsequent generation after us. And so what that means is there's going to be fewer people in the economy participating, purchasing products, saving money, putting money into the investment systems. There's a great author, Peter Zeihan, that talks a lot about this stuff. His book that just came out, The End of the World is Just the Beginning. It's a very gloomy, scary title, but it's a call to action in a sense. But I'm sharing all this because what I firmly believe is that real estate is the best vehicle for wealth creation. If you look at the statistics, about 90% of millionaires got that way investing in real estate. Real estate, in terms of world economic input, is larger than all the other public and investable markets combined. And so real estate, to me, is just such a great investment because, number one, they're not making any more land. It's immovable. So when you invest in a piece of property wisely in a great area that has economic demand drivers, it's not to say you can't lose, but on a long enough horizon, property values always go up. And so for us at Ferris Capital Partners, we really believe that, and it's actually, I'm going to circle back to your original question because I think the best vehicle is really about providing an exceptional experience, right? So for us, what that looks like at Ferris Capital Partners is we like to go and find older apartment buildings that are a little undermanaged, underutilized. And we come in. So for example, Lily, like we love to see bad reviews. Like when I go look at a building and we're considering purchasing it and I see like a 3 out of 5 Google review, I get excited because that means we can provide a better experience for the residents. And simply by doing that, achieve some great results. But then what we'll do is we'll go in and we'll renovate the units, improve the overall quality of the building through exterior improvements, adding additional amenities, and then that extreme focus on the resident. So similar to what I mentioned with the CEO of Costco, at Ferris Capital Partners, we actually focus on the resident. We hire a great team. They take really great care of those residents, the people that are paying rent on a monthly basis, and candidly willing to accept a higher rent each year because of the services and the additional benefits we provide, such that we create a great investment for our investors. So it's really about client experience. And I think in today's world, there are so many options that a consumer has that okay or good service just doesn't cut it anymore. In order to stand out from the crowd, and I really think it's a blue ocean strategy. Are you familiar with that term, blue ocean?
Yes.
Lily? Yeah. So, it's so amazing to me, but, a blue ocean strategy can just be always ensuring that you deliver an exceptional client experience. And if you fall short, doing whatever it takes to make up for it. If you just did that, no matter what your business is, customers will keep coming back again and again, and they'll refer their friends and family. So, no matter what your business is, you should be thinking about how do I make this process easier, better, faster, quicker, and reduce friction. And if you just thought about those things as the leader and you hire a great team of people around you that can solve the problems as they come up. I listened to one of your talks on a recent podcast, and I wish I'd written down the person's name, but it was a great talk. He was talking about, how CEOs shouldn't be working 100 hours a week. They should be working, 50, 60. But he talked about that idea of when you bring in that team and then you just focus on the constraints of your business, that he could not be more right. That's what it's really about. And often the constraint is client experience. You do all this great work to market, bring leads into your business, you convert those leads, and then you get the customer, but you fall short and you create a bad onboarding experience. And that customer just it was okay. They're not going to become a raving fan, in other words. So your mission is to create raving fans for your business, whatever your business is.
Thank you. So tell us why, for example, why is the strategy of multifamily investing? Why is that better, for example, rather than in comparison to just buying, let's say, a property that is like fresh, brand new, and you can just rent it at perhaps like the top, rate in the market? Why is that a better one than that?
Yeah. So for us, it's a couple of things. So with an existing building, so basically a brand new construction apartment building, and let's say we're talking about a complex similar to what we buy, but just brand new, you're going to have lower returns because ultimately it's very expensive to build these buildings, right? And so, in other words, on average in the southeastern United States, it costs about $280,000 to deliver an apartment unit in a new construction building. I can go buy an 80s or 90s or early 2000s unit for about $160 to $190, depending on the market. And so then if I come in and I add about $14,000 to that unit, putting in all new, features, whether that's granite countertops, stainless steel appliances, new flooring, new fixtures, et cetera. So now my total cost basis, if I assume I bought it at 165 and put, let's say, 15,000 for easy math, I'm now 180,000 all in, where that new construction's 280. So those new construction deals do command higher rents, but there's also a smaller market because guess what? The middle class is shrinking in the United States. It's harder for people to keep up with their monthly obligations with inflation. Salaries have increased, but not in line with inflation. And so there's just more pressure on people. So for us, we like to serve that working and middle class and provide a very great unit that feels new because we've renovated everything on the inside, but we're able to offer it at a much lower rent. And so tying it all together, the reason we love multifamily specifically, I say, compared to office or retail, is at the end of the day, people always need a place to lay their head at the end of the night. So there will never come a time where people say, you know what, I just don't need shelter. In Maslow's hierarchy of needs, shelter is at the very top. And so we think about it in that way, where retail sometimes have trends, right? Where, there's sort of a pullback towards in-person, and then now it's like all online, right? And so you see a lot of retail centers where the businesses turn over quite frequently, where I have residents in some of our buildings that have been there for 11 years, and it's just, you take great care of them. It's where they live and they want that same pride of ownership. And I say that in air quotes because they may not own it, but they still want to come home at the end of the day and feel proud about where they live, right? So for us, it's about providing that exceptional experience for, in our mind, an underserved population, which is that working class and middle class. So that's why we like it. Now, to scale it back a little bit, as you may say next, well, why not just go buy a single family property and rent it on my own versus investing in one of these deals? That can be a great strategy, and I absolutely encourage investors to do that. But the reality is that if you have one rental unit and your resident stops paying rent, your cash flow has completely shut down. And depending on what state you're in or what part of the world you're in, there may be things like rent controls and things that don't allow you to maximize your income. Or maybe they have an 18-month process to remove an unpaying tenant, like happens in, say, for example, New Jersey, New York, or up in Ontario, Canada, where a lot of our investors are. And so with that one bad resident, it could destroy your whole investment. Where if I have a 104-unit apartment building and 2 or 3 residents don't pay their rent, we can evict them, but we're still cash flowing and we're still in the money. And so it just reduces your risk as an investor by investing in these larger buildings, because you can handle a downturn in the market or a couple non-paying residents, and you can still weather that storm. Where if you have one property, if that one resident stops paying, you're in trouble, right? And so that's why we like these kind of deals. I do own some single family rentals, but most of my investable money that's not in the public markets for retirement is going into these residential real estate deals.
Thank you. So in general, would you say that there is a high demand for affordable housing and not enough supply? And would you say that is there also like a high demand for luxury properties that are like at the upper end as well? Or what do you find in terms of like property trends? Yeah,
absolutely. So you're right on. So we have an absolute supply challenge around the world, but more specifically in the United States and Canada. So for example, in the United States, estimates are somewhere between 5 and 7 million single family homes behind where we need to be to keep up with demand. So even with 7% interest rates, we're recording this in, early 2025. So interest rates are high compared to where they were, but actually normal on a 30-year. If you look over 30 years, 7% interest rates is about the average. But we just came off a cycle with 2 to 3% interest rates. And on top of that, post-pandemic, property values increased around the United States, depending on the market, somewhere between 30 and 40%. So it's an affordability issue. And so if you look at, for example, the age of the average first-time home buyer in the United States, it used to average somewhere between 28 and 31. It would fluctuate in there. Last year, it was 38. So that's a couple of things. It's one, people can't afford to own. And then on top of that, you also have millennials that are choosing to rent versus own because they prefer the flexibility. So all those factors are combining to make apartments a really solid investment choice, because today in the United States, it is $1,200 more expensive to own than it is to rent a similar like-kind property. $1,200, right? You think about that on a monthly basis, think about that on an annual basis. And so people are being either forced or they're choosing to rent versus own. And it shows up in those statistics. So that's another reason why we firmly believe real estate is one of the best wealth creation opportunities available to the average person.
Thank you. For those entrepreneurs wanting to build a 9-figure multifamily property investment portfolio, what would they need to do in terms of what are the 10 commandments of doing that? What are the 10 aspects they would need to look at?
Yeah, so you need to get very clear on your market, right? So where do you want to invest? And so for us at Ferris Capital, we firmly believe the Southeastern United States are where we need to be investing. And the reason for that is if you look at in-migration into states like North Carolina and Florida and Georgia, it's net positive. So more people are moving in than moving out. You also have a more favorable business climate in a lot of these markets. So the governors are offering tax incentives to attract businesses in. So for example, I live in Atlanta, and Home Depot, UPS, Delta, Coca-Cola, we have all these major Fortune 100 companies, but then in addition, they're doing a lot to attract more, sort of a startup type business. So Rivian, the electric car manufacturer, just built a plant in Georgia. And so we look for markets where there's a favorable economic climate. We also look for markets where the laws tend to favor the landlord a little bit more. And, the reason for that is that often what is looked at as a positive for a tenant, say, for example, rent controls. If you look at markets with rent controls, they often have the highest rents and the biggest supply challenges because it disincentivizes owners and operators and developers from building or renovating these apartment buildings. So, ultimately, a more landlord-friendly state tends to have a lower cost of living and more apartment options. And so at Ferris Capital Partners, one of our core values is a genuine love of people. So it's all about taking great care of that resident. And so we don't just throw somebody out because they miss 1 month's payment. We try to create a workout plan and work with them. But ultimately, if they're just not going to be able to do it, we have to make that business decision. So getting the market right is number one. Number two, you've got to have a team. Going it alone in this business, you will fail. You need to have a power team. So either that looks like people externally from you, so a great securities attorney, an awesome real estate attorney, a great accounting, company, property management. But for us at Ferris Capital Partners, since both me and my partner had found other success, we went ahead and made the business decision to hire an incredible in-house team so we could go faster. So getting the market, building your power team, and then being very patient would be number three. These deals that work and pencil out and achieve the returns that we're promising our investors are very rare. In fact, we look at about 200 deals to find one that works. So being very patient, I would say 4, be very disciplined, very clear on what type of investment opportunities you're going to, go after as a company or as an individual, and being very disciplined around what we call that buy box. So going back to Ferris Capital Partners, it's these 100+ unit buildings that have poor management and are underutilized and underserving the community in which they sit. So those are like 4. From a fifth perspective, you have to be very, in control of your schedule, because ultimately, if a deal comes across your desk that day, sometimes you have to act that day. So having systems in place to make sure that you can move quickly when those opportunities emerge. So, for example, we won a deal in Charleston, South Carolina before it went on the market because we received it on a Thursday. We underwrote it that day, reviewed it as a team Friday, booked flights, flew in Monday, toured the property, and submitted our offer that evening. Now, that process was a whole weekend's worth of work, as well as all day Friday, getting all of our data in from all of our vendors to make sure we were making an intelligent decision. So it was a whirlwind, but we knew if we didn't act quickly, it would go on the market and we'd potentially lose that deal. So being able to move quickly when you do find that great opportunity would be another.
Thank you. Tell us about how can entrepreneurs who, let's say, invest in one multifamily property investing deal, how can they turn that into two, and then from two to four, and from four to, how can they kind of go through this process really quickly so as to leverage the cash flow they would be getting from these kind of deals to buy more property?
Great question. So what I would recommend to maybe a newer real estate investor or an entrepreneur is to maybe actually consider buying a duplex or, that first property they buy for their single family home. So, you're just getting started, you buy that first home, or depending on where you're at, if you haven't yet bought that first home and your lifestyle would allow for it, buy a duplex. So you have income coming in on that other unit, you're living on the other unit. If it's your single family home, when you go to buy that next property, consider a refinance, take some cash out so you can buy that new property and take that down payment, but then turn that first property into a rental. And then over time, as these properties appreciate in value and you renovate and improve them and then drive up the income, refinance, cash out, buy that second property and that third. That's how a lot of real estate investors get started. They go real small, and then incrementally over maybe a 5-7 year period, they now have 2 or 3. And then from there, you can start going really fast. At Ferris Capital Partners, what you're actually doing is investing in a business. So when we buy an apartment building, we create all new entities. And so investors are investing in this business, which is that apartment building. And so they're shareholders in that business. And so what a lot of our investors will do is when we close the deal and we cash out and they get their returns, you can leverage that 1031 exchange, which is a tax law here in the US that allows you to avoid capital gains by rolling that income that you received off the investment into a new investment in under a certain period of time. And so that allows you to keep leveling up and moving further down the path while avoiding taxation. So those are just some of the strategies, but it goes back to what I said earlier, go small to go big. Don't go try to buy a 20 unit apartment building for your first investment. Start with a single family home. And then as the income comes in and you know that this is what you want to do and you have the passion for it, then you can cash out, refi, bring another deal in and start building your portfolio that way.
Thank you. Tell us about an example of, let's say someone was to invest, I don't know how much a multifamily apartment is, but let's say $500,000,
yes.
And correct me. And then from there, how much ROI and how much cash flow would they get, and within which time frame?
Yeah. So, on our investments, we typically target a 5% cash on cash return on an annual basis in year one. And then over the 5-year hold period, that's typically how long it takes us to execute our entire business plan, is approximately 5 years. That cash on cash will increase because as we renovate units, we're bringing in additional income through higher rents. So we typically average about 6 to 7% cash on cash returns over those 5 years, starting at 5% and then increasing throughout the ownership. We also target a 20% annual return. So our goal would be, if you've invested that $500,000 with us, that at the end of that 5-year period or sooner, we're actually giving you back $1 million. So you'll double your equity in that 5 years. That's our stated goal. And we don't take down a deal unless our underwriting shows that reality is possible. Now, at the end of the day, we have to execute on the business plan and we have to react to market changes and conditions. So these returns are in no way guaranteed. But when you buy correctly and you're disciplined and you only buy deals that you can execute on, then you can achieve those 20% annual returns. So when it comes to single family, it really depends on the asset and the rent and the area you're charging. But you should, the way I think about it is your cash on cash return should absolutely be higher than what you can get in a bank CD. And so today, you can get a bank CD for anywhere from 4.5% to 5.5% with interest rates where they're at. So in other words, I could just take some money and park it for 9 months and get a 6% return or a 4.5%, 5% return. So my cash on cash return on my investment should be higher than that. Otherwise, why not just put your money in a CD, if that makes sense? So that's why we target that 6 to 7% average cash on cash return over the 5-year hold period.
Thank you. Tell us how entrepreneurs can leverage economies of scale in order to create a nine-figure property business.
Yeah. So for us, it's one of our focuses is we only buy in a handful of key markets. And so over time, for example, we have 3 buildings in Charleston. And so by doing that, we're able to actually leverage teams from the 2 assets that we currently owned, and we just closed on this 3rd one to help manage that one. So we're actually lowering our expenses because now we have more property in the market. It actually lowers our capital expenditure, our CapEx budgets, because now we're buying more material in bulk versus, 4 or 5 unit renovation kits a month. We're buying 10 or 12 so we can negotiate discounts. So, if you're a solo entrepreneur and you're thinking about owning and managing your own real estate, do it in a tight geography that's such that if you say own 12 properties, you could drive them all in an afternoon or maybe a day. Because ultimately, when you own residential real estate, you have to keep your eyes on it. You have to go by, you have to check on it. And if you own properties, all over the country or even all over your state, and it takes you 5 days to drive all your assets, now all of a sudden that's a big drag on your productivity and time. So buying in tight geographic markets will allow you to get those economies of scale through lower expenditure budgets and obviously efficiency in your management.
Thank you. Tell us how entrepreneurs can leverage appreciation and depreciation in order to create a nine-figure property business.
That's right. So real estate, because once again, it's immovable and they're not creating more of it, does always tend to appreciate over a long enough timeline. In fact, the only time in the United States that property values decreased in a meaningful way was during the Great Recession. And of course, the Great Recession was caused by over investing in real estate. In other words, there was so much capital coming into the market from the retiring or from the baby boomers pre-retirement that they started offering just these insane mortgages because the thirst for that mortgage-backed security product was such that they just kept jamming more and more product in, and they got loose with their requirements, and it crashed the real estate market. So our view is that was somewhat of a black swan event that will never happen again. And so with that, we believe that you, number one, will get natural appreciation just by owning an asset for a period of time. But the beauty of what we do is we force appreciation, and that's through property improvements. So commercial real estate is valued based on an income approach. So if you sell your home that you live in and own, it's the comparison approach. So your residential real estate agent will go out and look at other properties that are similar to yours that have recently sold and say, based on this, I think your home is worth X. Well, in commercial real estate, it's all about your net operating income. And so if you can increase your net operating income over your hold period, then you've added value to the building. So that's what we call forced appreciation. So you have natural appreciation. That's just because land is, immovable and they're not making more of it. Then you have forced appreciation by improving the operations and efficiency and increasing the net operating income. And then on the depreciation side, you have a lot of benefits. So basically, we have a company come in that does a full audit of the building, and they separate out the real estate from personal property. And so in commercial real estate, your cabinets and countertops are considered personal property, and all those things you're able to depreciate. So each one of our investors will get a tax slip at the end of the year, and it'll not only have, the income they've generated, but will also factor in that depreciation of that personal property. So not only is your return taxed at a lower rate, the capital gains rate, but you're depreciating along the way. And then, of course, you have the appreciation and the forced appreciation based on the work we do. So that's why, once again, 90% of millionaires got that way through real estate.
Thank you. What's the best way to manage risk to create a nine-figure property business?
Having a very strong underwriting model. So this is very critical. And so for Mark and I, we both were big investors in real estate. Mark's my partner, Mark Ferris. And so we were very familiar with what it takes to make a successful real estate investment. But, we weren't somebody who was sitting around analyzing these 100+ unit buildings. So we went out, I mentioned this earlier, that power team approach. So we went out and we found an acquisitions person with 15+ years experience that at a glance knows pretty much whether the deal could or could not work. So he can quickly, push away the bad deal, so to speak, and only focus on those that have an opportunity. And then he can do this deep underwriting analysis. And then in addition, we have an asset manager, because ultimately she has to manage that business plan once we close. And so basically, we built an investor committee. So our acquisitions guy, Joe, reviews the deal. He stamps it. Georgia, our asset manager, she comes in and she make sure the rents aren't too aggressive and that she can absolutely execute on the business plan. I tend to focus on the market dynamics and the submarket that the property sits in. So real estate is hyper local. So you don't say, I invest in Atlanta. For us, we invest in the northern suburbs of Atlanta, if that makes sense. And so when we find a new deal, I go deep into the market and make sure that there's diverse economic opportunities. So in other words, there's not like one industry dominating. And then we look at the other factors, the average income in the area, the population growth projections, et cetera. And then Madison, who's our finance person, she comes in with that skeptical eye and questions everything and make sure our assumptions are correct. And then Mark Ferris is sort of the guy who has to raise the capital from investors. So he needs to make sure there's a really good story to tell about this deal. And so if the five of us can't align on a deal, we don't do it. So it's like an all in or all out kind of philosophy. So those are some of the things you need. So whether you're a solopreneur or you're working with a team, if you're on your own, find some trusted advisors in your network, whether friends or family that have business acumen that you can maybe bring in either on the deals or simply to help check your assumptions and make sure you're not underthinking a challenge or, overestimating what you think you can get. So I'm a big believer in the team, Lily. Nobody does it alone, as I said at the top. And so having a really great team around you is going to help you achieve those results you're looking for.
Thank you. What's the best way to reach 100% fully, 100% bookings for your property portfolio? Because I think it's not just about, creating a great property portfolio, but also making sure that that is bringing enough returns day in and day out so that you can have the cash flow and everything kind of runs smoothly.
Yeah, no, that's a great question. So interestingly enough, we actually don't necessarily target 100% occupancy. And the reason for that, if you have 100% occupancy, it may mean you're not pushing hard enough on your rents. And so we actually like to see around a 94 to 97% occupancy. That means we're doing the right things. We're maximizing the business opportunity and we're managing the flow, right? Because ultimately, if nobody moves out, I can't renovate the unit. So that's part of it. The other side of it is you have to have a great property management team. So we do leverage third-party property managers, but in reality, we actually go hire the team that then goes and works for that third-party property manager. Because I know that you could take the best property management company in the world, but if they hire the wrong person to manage your asset, that the investment's going to fail. And so we make sure we have a really great team. And what that looks like is these people have got to have a people first heart. They have to just love people and love giving great service and taking care of residents. And if they don't have that passion, they're going to be a fail. But they also have to have business acumen, because at the end of the day, we love people, but we are running a business here. So you have to balance those two needs. So marketing is going to become a critical component as well. So when you have the right team, then you start your marketing campaign. So we're big believers in going where the people are, right? So for example, apartments.com is where the majority of residents identify their next property. So we advertise on apartments.com. And then on top of that, we actually have our property management team do targeted marketing. So for example, a lot of police departments, for example, these are the hometown heroes, if you will, your doctor, your nurses, your police officers, firemen, et cetera. So circling around police officers for a moment. A lot of the younger police officers aren't really making a whole lot of income. It's not a well-paid job in a lot of municipalities. And so what we do is we create a relationship where we'll bring in, say, for example, a police officer at a slightly lower rate. But because we're doing that, they'll act as a community sort of resource officer. So they walk the property, a couple of times a day, ensure that it's safe and that the living conditions are great and that there's no disruption from other residents. And it just helps provide an additional service. So that's one way we can do it. And so the person's paying a little bit of rent, but we're getting something of value from it. And then the other residents like that, and they'll pay a little bit extra in rent for that. So those are some of the things we do. We literally go to businesses that are in the area that maybe are major employers, and we, provide flyers and candy. And so, it's like really marketing any other business. You have to do sort of the more passive approach, online marketing, et cetera. Make sure your website looks great with photos and virtual tours. But then you have to do more outbound marketing, which is reaching out to employers, other companies, et cetera, in the area that could attract residents to you. And that may look like offering them a slight discount, or it may just be more of, hey, we're in your area. We have some great units. We think your employees would be a great fit for our community. And then they come that way. So it's a combination of those factors. And then to put a bow on it, I would say, we have a philosophy of no lead left behind. So that applies to all aspects of our business. So when somebody calls and inquires about one of our units for sale, like we're going to answer that call live, like 90+% of the time. And if they leave a message, we're going to get back to them, in under an hour, if not, under 30 minutes. Because ultimately that person may just go find the other apartment who picked up the phone faster, and they're going to book a lease there versus at our community. So speed to lead and no lead left behind are other critical factors. Wow,
that's amazing. Tell us what habits can property entrepreneurs have so that they can create a 9-figure business? Is there something in their energy? Is there something in their mindset or their beliefs? Or is there a particular habit they can develop or routine that will give them that energy, that magnetic drive? I don't know, something that will make them attract the right joint venture partners to kind of get themselves fully booked with, the right tenants, get themselves fully booked with appointments with potential landlords or, other opportunities and business deals and, property buildings they may want to purchase.
Yeah, no, so I would say that this applies whether you're thinking about real estate or really any business, right? So successful entrepreneurs, in my mind, are very focused and they tend to have a very habitual life. And so, for me, that looks like I get up around 5:30 every morning. I do some breathing meditation. I read for about 30 minutes, and then I go either to the gym or I hop on the Peloton. And so I move my body, but I start the day with some meditation, some reading to get some good inputs into my brain, and then once again, exercise. So before I sit down at the desk, we have an 8:30 team meeting every morning at 8:30 a.m. Like I've already achieved a lot, more so than a lot of people, right? And that maybe they'll achieve all day, and I've already done it before 8 a.m. And so I think having those kind of habits now, that's my routine. Maybe you're somebody who works better at night, and so your creativity or whatever kicks in later on night. So building a system and a form of habits that work for you and support your goals is number one. Executive coach I worked with for a number of years, he told me that ambition is really just the willingness to do whatever it takes to succeed. And so that's something we think a lot about. So your ability to manage stress, and that circles back around to what I just talked about. I think exercise, whatever it might be, it could be taking your dog for a 30-minute walk, it could be going for a bike ride, it could be doing yoga or whatever, helps to burn off some of the energy that we all have, and it helps to reduce some of our anxieties. I think a lot about how in a very short amount of time, say about 150 years, human beings went from very physical labor to sitting behind a desk in front of a computer. And I don't think we fully caught up yet. And I think that's why we see so much anxiety and stress. And so I think exercise is a big key factor here. I think it's all about, being very clear on why you're doing it and making sure what you're doing is something you get an immense amount of joy and pleasure from. I think a lot of times we end up in jobs or roles because society put pressure on us and said, you should go be a doctor, or you should go do this or do that. Where for me, I know, and I'm 44, it's taken me a little while to realize this, but what I love to do is to build and grow new businesses. I like systems, I like problem solving, and I like challenges. And so one of the reasons I moved from my prior company to this company after the exit is because I just lost my passion for it. I just didn't have it in me anymore, because we had gotten to a point where now it was just about maintaining. And so I learned in that moment that I always need to be in an environment where I can problem solve, grow, and build. And so, I've been very clear with Mark Ferris, and I'm in this for the long haul. But, if there ever comes a time where my day starts to look like sitting in front of meetings all day long and I'm not out building and growing, and then we're going to probably start talking about an exit for me. Not in a negative way. We'll maybe take a year to do it. But it's just that I know myself now at this age that that's the environment that I'm happiest and that I thrive in. And so making sure whatever you're choosing to do. So if you're listening to this and you're going, well, I don't really have a passion for real estate, but this sounds amazing. Pump the brakes a little bit and just get really clear. Like, what is it that excites you? What is it that wouldn't feel like work if you did it every day? And if you can find that, that's when the magic really happens. And the entrepreneurs that I know that have the most success and are the happiest tend to be doing something that they deeply, deeply love, and it does not feel like work to them. So that's the critical component. You have to find that purpose.
Thank you. Tell us where entrepreneurs can find you and more information about how to create a 9-figure property business with multifamily investments.
Yeah, thanks so much. Yeah, so the easiest way to connect is just go to FerrisCapitalPartners.com. That's FARIS We are always willing to jump on a call. So we have book a call buttons. You can just, simply send in a registration contact form and we'll reach out however you want to go about it. But if you want to book in a time with me, I'm just always happy to connect, Lily. One of the things I've learned in my career, which is, I guess, kind of the last lesson, I suppose, is that relationships are going to be key to your success. We've talked a lot about the team, right? But you never know when doing a favor for somebody or helping somebody out, it may not lead to anything, but in my experience, it really always comes back, in some form or fashion. It might be 10 years from now. So I've talked to a lot of investors that booked a call. And at the end of the call, we decided, this isn't the right fit for you. Maybe this is the approach. And guess what I'm going to do? I'm going to send you some resources. I'm going to connect you with maybe an attorney who can help you with your goals, or, somebody in my world that I think could be of support or help for you. And I may not get anything out of it, but maybe it's just my view on karma. I think if you put more good into the world, you'll get more good back. Right. And so I think about like the Boy Scouts. The Boy Scouts always said, leave the campsite in better condition than you found it in. And that's sort of my approach to life. I'm by no means perfect and I get it wrong a lot. Right. But, when I do, I just try to say, okay, how do I make this better? Or how do I leave this, this a little bit better than the condition I found it in? So I think that's another key factor.
Follow us for more interviews with world's most influential business titans, providing you with the insights to awaken to your full potential so you can get paid to be yourself, find true happiness, and manifest anything you desire.